SoftBank, the Japanese conglomerate holding company, has been dumping their SoFi stake. Last month, they owned about 9% of the company, and as of the latest reporting yesterday, that number is down by over half. In this video, we're going to be talking about SoftBank selling their position. We're going to be talking about some news catalysts for SoFi and the outlook ahead in the next couple of months. Before we dive into the SoftBank news, I wanted to do an overall update for where we stand on SoFi ever since their last earnings, Q2. And if you're not familiar with what SoFi reported, you can find a video that I did on the Q2 earnings breakdown in the description and at the end of this video as well. I recommend you watch that because it's going to set the context for where we stand. Earlier this month on August 9, SoFi launched two ETFs. The first one was a Web3 ETF and the second one was a Smart Energy ETF. Anthony Noto, the company's CEO, highlighted that this selection of SoFi branded ETFs enables accessible, affordable, and diversified investments with users in mind. He went on to note that the company plans to allow users to invest in areas that they are passionate about, and obviously this is very positive since it diversifies the offering and adds more ETFs to SoFi's growing portfolio. In addition, back on the 26th of July, SoFi raised their annual percentage yield on their checkings and savings account up to 1.8%. This improvement was powered by the bank charter, and on this note, Anthony Noto, the CEO, highlighted that inflation has hit people's wallets hard. By raising our APY for direct deposit members to 60 times the national average, we're helping put more money in people's pockets. Now, 1.8%, if you think of it in the grand scheme of things, it's really nothing. But when you compare it to the vast majority of financial institutions and major banks out there, this number is among the best. Just as a reference, in this image, you can see how it stacks up with some of the major banks out there, the Wells Fargos, the JP Morgans of the world. 1.8% seems like heaven compared to that. And on August 12th, just a couple of weeks later, SoFi had another update where they raised it again from 1.8% yield to 2% on checking and savings account for direct deposit members. And of course, all of these are perks of the bank charter, of the news that we've been waiting on for the past year that we've been anticipating. These are the rewards that people who do their everyday banking with SoFi get to enjoy as a result of that bank charter. Now, in keeping with the chronological order of events for August, let's jump into the SoftBank news. On August 8th, SoftBank released a kind of vague statement that they could be selling some SoFi stock. Because of the wording here, many people were starting to have some commotion around how much were they going to sell? Are they done selling? Have they done it already? Or is it in anticipation, something that's coming up? I was following the news fairly closely on that day, and from what I could see, the reason that SoftBank was selling was purely liquidity driven, and we're going to talk about this in just a sec. But a later SEC filing, a 13D filing, showed that SoftBank had decreased their position by 12.6%, from 95 million shares that they held down to 83.2 million. On August the 5th, they sold 5.3 million shares at a price average of $7.99. On August the 8th, they sold 6.68 million shares at a price average of $8.17 a share. On August 11th, more 13D filings were revealed, showing even more selling. This time, a total of 19.57 million shares, down again from 83.21 million down to 63.65 million. They sold 4.65 million on August 9th at an average share price of $7.42, 5.91 million on August 10th at an average share price of $7.79, and a whopping 9 million shares on August 11th at an average price of $7.75, which basically means that last week they sold pretty much every day of the week. And that brings us to this week. And as of yesterday, August 17th, so far, SoftBank has unloaded another 28.64% of their position, down from 63.65 million to now having only 45.42 million shares. This is 18 million shares sold in the past 4 trading days alone. So on August 12th, they sold 4.6 million shares, 7.57 average price. 4.41 million shares on August 15th, 7.54 average share price. 5 million shares on August 16th at 7.1 average share price, and 4.2 million shares on August 17th, yesterday, at $7.05 average price. And since I'm recording this on August 18th, we don't have the numbers yet for what SoftBank sold today. But since August 5th, when the selling started, The sales have accounted for more than half of their total position, from 95.2 million to the latest reporting on August 17th of 45 million. Now, of course, all of this has negatively impacted SoFi stock. It's been adding pressure to the stock alongside blanket macroeconomic factors that are dragging down the whole market. The market has had a couple of red days. SoFi is not immune to that. And all of this is definitely a short-term headwind for the stock, but it doesn't change anything on the business side. The company is still executing effectively. The reason now why SoftBank has been dumping their positions has been very simple, and it all has to do with liquidity of the actual holdings company itself. Nothing to do with the performance of SoFi stock. SoftBank has in fact been selling out of many of their positions due to the same reason over the same time period. And all of this was as a result of them reporting a record loss in their Q2 earnings, $23 billion loss for SoftBank, and the stock is down over 50% from their peak last year. And in addition to this, a couple of days ago, news was released that Elliott Management, who we've talked about in this channel before as it pertains to Pinterest and Twitter, they actually started selling off their stake in SoftBank. Over the past couple of years, Elliott had accumulated a close to $3 billion position in SoftBank, and as of 2 days ago, they've begun dumping that stock. We don't know how much they've dumped or how much they intend to sell, but they've sort of lost faith in Masayoshi Son and in SoftBank as a general. And just to highlight the fact that it is liquidity driven, if the $23 billion loss for the quarter didn't convince you, SoftBank has also dumped their entire stake in Uber between April and July of this year at an average share price of $41 per share. If you'll remember, back in 2019, SoftBank was the #1 largest shareholder in Uber. In 2021, they sold off a third of their position at a high profit, and in the past couple of months, they've sold off the remainder of their Uber stake. So it seems as though for SoftBank, things are really not going their way. Investors are losing faith, and the business itself has to sell positions for liquidity reasons. And all of this is going to negatively impact SoFi, and it's going to negatively impact all of the stocks that SoftBank holds because they're selling in blankets. Now, this is a negative catalyst, of course, for the stock in the short to medium term, but there was another piece of news that might have gone unnoticed over August that impacts the business. On August 9th, there was a US White House press briefing where the press secretary confirmed that a decision would come from the Biden administration on student loan forgiveness before August 31st. So basically, the White House press secretary said that we're continuing to assess our options for cancellations. No decisions have been made on this yet, and that the president has made it clear that he'll have something by August 31st. The full transcript of that press briefing is in the description below for your reference. Now, this is very important because more than 40 million Americans carry student loan debt, and this also impacts SoFi's bottom line. SoFi's lending segment is their largest segment by far of their entire business, and the student loans have been the bread and butter revenue driver for that business historically. Now, it's worth mentioning that SoFi management team on their earnings call highlighted that they do not expect student loans to return before the end of the year, meaning that in their expectations, they're operating in a world where student loans are out of the picture for 2022. And despite this, if you'll remember, or if you've seen that previous video, SoFi actually raised their full year guidance for 2022. So the business is expecting the worst on what's going to happen from a White House perspective, but obviously we're hoping for some good news. Now, all of these moving pieces are happening at once. SoftBank is selling for their own reasons. The White House is pushing their own agenda with the midterms around the corner, and it's all impacting SoFi's bottom line. We don't know necessarily when SoftBank is going to stop selling their positions or whether they're going to sell out of the entire position. It seems as though they're just selling every single day on a blanket. But if we just do the math, let's assume they sold stock today. That would put them near 40 million shares. Their average sell on a daily rate is between 4 to 6 million shares on average, which means that they would have sold out completely in about a week, maybe a week and a half. However, despite this, I do think that SoftBank will still maintain a stake in SoFi, albeit a much smaller position, maybe 20 million shares, maybe 25 million shares in general. So I don't think the selling is over, but I think the majority of the selling has definitely concluded. And look, it's been 2 straight weeks of them selling every single day. At this point, it's priced in that SoftBank is putting negative downwards pressure on the stock, and all of this stock that's being sold by SoftBank is being purchased up by the remainder of the market. If we take a look at SoFi stock, yes, it is down 11% in the last 5 days. However, if we just zoom out for a little bit to a monthly view, the stock is still positive in the past month alone. So as I mentioned before, it's still very much a short-term headwind that only affects the stock and not the underlying business. We will learn more about the changes to the underlying business with the decision that's going to come from the Biden administration in the end of the month, and what's going to happen with SoFi's lending segment as a result of that with their student loans. Personally, however, I've been adding to my SoFi position at any price under $7. I am scooping up those shares happily. SoFi is currently my largest position and I couldn't be happier owning it. And I think you all know that. I think this is video number 22 on SoFi alone. I can't stop talking about that company for right now. However, this is the Fundamentals of Investing podcast. Thank you so much for listening.